Well, it's about time. Webull has now revealed options trading on their trading platform. This video, what I want to do is go over how to trade options on Webull. If you're someone who's new to options trading, or if you're someone who's moving over from a different platform, this video is going to be great for you to get a great idea as to how to trade options on the Webull platform. The cool thing here about options trading is that you're able to take a smaller amount of money and make more money with that smaller amount of money in terms of a percentage gain, rather than trading the actual underlying stock. So I want to dive through all of that in this video. And this video we're going to be doing is going into my computer and going over the option chain, the option trading platform on the computer, the web app version of Webull. There's a lot of different versions. There's the web app, there's the actual desktop, like downloaded software version. You can even have the app on your phone, which I have made a video on, actually the option chain on your phone, how to use it on your phone. This is going to be more of an in-depth video going on the computer. It's pretty similar, but if you guys want to see the specific aspects to the phone, I have a video going over like Webull options trading is here, something like that, when they first announced it, when it was not even available to everyone, but it's starting to be rolled out to more and more people now, so that's why I'm going to make this video. Real quick, Webull is an awesome free trading platform right now that competes with Robinhood, the TD Ameritrades, the Charles Schwabs, the Fidelities, those platforms. As everyone has moved over to free trading, Webull has come along as well, and right now they're doing an amazing promotional offer, which I have a link down below to that. When you sign up for the platform and deposit any amount, you're gonna get 2 free stocks, one for signing up and a second for depositing any amount. It will take a few days for each of those steps in the process to settle, but once it does, you'll get your 2 free stocks and you'll be on your way. The second free stock's up to like $1,400 in value. So that link is down below. So at the end of the video, make sure you do that, jump down, create your account, download the app on your phone, and then of course you can always log into the web app version, which I'll be going over on this video. So real quick here, what are options? Well, you have calls, you have puts. Essentially what you're doing is you're buying the option to sell or buy or sell 100 shares of the underlying stock. Now there's more ways to go about it. You can even sell options rather than buy options, which I can briefly discuss. That's a little more complicated, but I'll briefly discuss that in this video. You'll collect a premium for that. But generally, when it comes to options trading, you're most likely going to be buying options. And the cool thing about options trading is that you can make money when the stock goes up or when the stock goes down. So rather than holding shares of a stock, and when that stock is going down, right, you're losing money, your portfolio is going down. Well, when you have options, when you have put options, that means you're essentially shorting the stock, you're going short, and you can actually increase the value of that. The option value will increase as the stock goes down, and you can sell the option premium. You're really just selling the value of the option for more money than you bought it. So we have calls, we have puts. Calls, essentially you are looking long the stock. Puts, you are short the stock. And calls, the option to buy 100 shares of the underlying stock at a specified strike price, which I will show you guys how that works, how that setup is in Webull. It's pretty simple. It's somewhat complicated the first time you're going to see it, but you'll understand it once we go into the platform and actually understand that. And puts is the option to sell 100 shares of the underlying stock at a specified price. One more thing to note real quick before we actually show you is in the money versus out of the money. Something that's kind of confusing. Call side, if you have a call, when you are in the money, the actual stock price is above the strike price or the option price that you have, okay? That's in the money. That's going to generally mean you have a higher value option. Out of the money on the call side means the actual underlying stock price is below the option strike price. That's out of the money, and puts the other way around. So you're actually going to be in the money on a put when the stock price is below the actual option strike price, and vice versa. Let's say the actual stock price is above the strike price you have. That's going to be out of the money on the put side. So in the money versus out of the money. In the money is going to generally be worth more money. Out of the money will be worth less money. And come the expiration date, which there is a expiration date on these options, so you can buy them out for many months out in advance, or you can buy them for this week or maybe in a couple of days depending on the stock you're trading. The expiration date, if you get to the expiration date and you're in the money, the option will have value. If you're out of the money, the option will be worth 0. So your investment could go to 0, and that is one of the risks that we will talk about more in this video. But why would someone want to trade options? Well, you'd want to trade options because you can leverage a smaller amount of capital to make more, or you can leverage $100 and you can trade like Tesla stock or Apple stock with just $100, whereas you can't even buy those stocks. You can't buy one share of those stocks for $100. And if you did buy a share of those stocks, maybe if you have a great week, the stock goes up 5-10%. Tesla, on the other hand, could be very volatile. Maybe if there's good news, it can go up 5-10% or down 5-10%, whatever. But if the stock were to move 5 or 10%, depending upon your option, you could make well over 100% on your money. So if you had $100, that $100 could turn to $100, $200, $300, $400, depending upon the options that you have. And that is the power of options trading. So let's jump into my computer, the Webull web app, and we're gonna go over the option chain and how everything works. And I also wanna go over some awesome tips so that you guys can have a strategy and a plan in place so that you can start trading these, at least if you're a beginner or if you're someone who's more advanced, it'll help you guys out in some way to help you guys make money when you start trading these options rather than lose a lot of money, because I've been through tons of ups and downs. So I hope those tips can help. All right, so here we are inside of my Webull account right now. I'm actually trading a couple stocks. These are active. Here's my daily P&Ls. This is a lot of the penny stocks that I've been trading, and I have these videos going over these videos, recapping these trades every single Saturday. So make sure you are sticking around to the channel so you can catch those videos. So let's jump into the Webull option chain. So here we are on Webull. This is the web app platform. If you type in app.webull.com, you're going to come to this as long as you have an account, which again, link is down below to sign up for an account and grab your first 2 free stocks. As long as you deposit any amount into your account, you will get that set up, and that will be an awesome way to start your account and have some money and have some stocks in there when you just get started before you really have to worry about funding it by significant amounts. So you can really get a great start, especially with options trading. You can turn that money into a little bit more money, and so let's show you guys how we can do that. So what we're going to do here is there's a lot of information here on the side. There's like a watch list section, there's like a stock section. We can go through all these different things, and what I'm going to do here is I'm going to actually go to the stock section because I was just in my account, and I can go to my account, I can go to today's orders, positions, P&Ls, all these different things, which actually, peep the nice P&L percentage over the past 4 months, 200%, pretty solid if you ask me. So I've kind of found my niche, and that's what I'm going to encourage you to do when it comes to your own trading. And so that's what this video is going to hopefully help you guys out. If you're looking to get into options, here we go. So right now what we have is Tesla pulled up, and I want to use Tesla as an example because it's pretty cool, and I will use a different example as well to show you guys the different value and pricing and options, which we're going to get into. But what you can do is go to the stock section, and right off the bat you can go up to the typing a symbol. So for example, you can type in AAPL, that's going to be Apple. Pull down whatever stock you want to trade. You can create your own watch list, things like that. This video though, we're going to be talking about options. So we already have Tesla pulled up here, and the cool thing that I do like though about the Webull platform, the reason why I like this platform if you're more of an active trader opposed to the Robinhood platform, is because you have the charting features. You have much more charting features. You can look at the intervals, 1-minute intervals, 2-hour intervals. You can look at a monthly interval. You can look at all these different things, and we can see Tesla's absolutely just blowing things out of the water the past, as we know, the past couple months it's been going crazy. And then what we can do is we can zoom in on this chart, we can zoom out on this chart to get a better view as to how things work. I do have some indicators pulled up. I have volume here on the bottom, so you can kind of see a lot of green, an increased volume means a lot of buying volume. We see a lot of, on the sell-off periods, we see a lot more red, so you can kind of see where that's coming from. We can change up a bunch of different things, indicators, and that's not the point of this video though, where we're talking about options trading. And so see this little guy right down here? This is going to be what we want to look at. You want to click on the options button, or actually pull this guy up right here. So we can pull this up, or we can even maximize it. I like pulling it up like this if that helps, but we're going to maximize it here because it makes it a little bit easier for you guys to see. But if you were someone who does like to look at a chart as well, it could be cool to see the options on over here. We can scroll up and down to get our strikes. We have 10 strikes shown, so it's going to show us 10 above the stock price, which it has the stock price right here, and it's going to show us, 5 above it and 5 below to give us 10 strike prices. We can increase that, we can decrease that, whatever we want. I'm going to leave it at 10. That's all we really need to worry about for this. We have Tesla here trading at 787.27, so currently down 1.5% today. And that's what it's going to be, and we can kind of see the chart up here, of course. But let's expand this, make it easier for you guys to see. So, like I was mentioning before, we have a strike price, and if we're looking at the call side, which is on the left, puts are on the right. So it's somewhat complicated, but I want to make sure this is understandable and easy to understand and see. So we have the calls on the left, puts on the right, strike price down the middle. Now Robinhood doesn't have this same feature. You have to click on calls, you have to click on puts. Okay, so it shows you all of one. Webull here, it has both, and this is what I've kind of seen here on Fidelity. I've used Fidelity before, and it's similar to this where it has them both like that. And then on the top, we do have the expiration date. So it's something you want to see. Now, we could even change this to more of a chart setting. We can change this to a table setting. You can change all your settings if you would like, but we have the expiration date on the top. So right now we can change the expiration date from the time I'm filming this video. This is the Friday. This is the 28th, is a Friday. This is the weeklies. These are all weekly contracts. And so the next week, Friday, boom, boom. And so usually these are going to expire every Friday. And we can even go out further into time as well if you would like. But it's showing you guys right off the top up through April 17th. And the reason why it has all those is because you can trade these options. It doesn't have to be an option that expires like even this week, this month, this year. It can expire much, much farther out. And so in doing so, there are going to be different prices, which we're going to dive into. But on the left-hand side, we have open interest, we have volume, how many are actually being traded, we have last price, we have the bid and the ask. So this is kind of interesting, and it's good to see how they have a bid and the ask for you guys. And when the market is open, this will not be huge. So this bid and ask right now is 30-cent difference, not huge for the price of these contracts. We have a 30-cent difference here on the put side, so same type of thing. And since Tesla is down, we can see for today, what it's going to be showing here is the percentage. So it's going to be showing this is up 9%, this is up 12%, 9%, and it's going to show how far these are down, how far these are up, and that is because Tesla is down today, that the put side will be up, which means you actually make money if you have puts because Tesla's going down, so it's making money on the downside, and the call side, you're actually losing money because you are long. If you have a call, you are long. If you have a put, you are short. So now the next step is, okay, what contract do you want to jump into? What contract do you want to buy? So when you click on a contract, what you'll have to do is click on the left or the right hand side. Okay, if you click on just this strike price, nothing's going to happen. So I'm clicking here, nothing's happening. So let's say I'm looking to go long and I'm looking to go out of the money. So if I'm looking to go long and I'm looking to go out of the money, it's going to cost me less for a contract. What Webull does is a great job of showing you in the money by having this highlighted in this like turquoisey color right here. So in the money, we're going to see right here, in the money again on put side here, out of the money, it's just going to have a black background. So it's easy to see. Reason why this may somewhat confuse you as well is because the strike price goes up as it goes down. So you can we see that Webull is showing a 777 strike price right here on the top, and then we have an 805 at the bottom. So the strike prices are going up as you move down. That may be somewhat confusing to a degree, but that is the case. And so out of the money, we're looking out of the money on the call side. We want to look towards the bottom here because Tesla out of the money, we're looking for a strike price above what Tesla is trading at. So if you want to buy cheaper options, you're going to look for options that are out of the money. If you want to buy options that are going to cost more but are going to be more safe in terms of when we get to this expiration price or expiration date, if you're in the money, this will have value, so you can at least sell it. Even if even if it doesn't go your way, you might lose money, but you'll at least have a salvage value. Out of the money, you're risking if Tesla does not move the same way that you think it's going to move, and what's going to happen is Tesla will actually be, this option will expire worthless. So you'll get to the Friday the 28th and it will expire with a $0 value, and so that's how you lose literally 100% of your investment, which is a massive risk to options trading. But then at the same time, that's why we trade. We understand the risks, and by managing that risk properly, you can actually make money with trading these things. So we're here, we'll click on an option, we'll click on a contract. Let's click on the 800s on the call side. So this is going to be a little bit out of the money, about $7 out of the money. And what happens is then we pull something up here on the right hand side. Somewhat complicated, but also showing you a good, better than Robinhood in terms of what they show you here on this side. It's going to have a 50-cent spread, so it's showing you the bid and the ask. And what you're going to have to do to put an order in is you're going to either put a limit or a market, or you can put a stop limit, all these different order types. I have a video going over these order types if you want to check that out. And you're going to buy one contract or more contracts, whatever you want to buy, and that is essentially going to be multiplied by 100 on your actual price. So the premium that you're going to pay is going to be shown right here. That's a key area to look for when you're on Webull. They're going to have a premium right down here, and what you're going to do is you're going to put your limit price in or a market price. Market price is going to be filled somewhere between $13.40 and $13.90 between the bid and the ask for this option right now. A limit price, you'll be filled at your price or better. So what does that mean? If you want to be filled at, let's say, 1350 or better. So you're not going to pay more than 1350 for this contract, which then multiplied by 100 comes out to $1,350. So that is what that means right there on the Webull side. And you can click on the place order, and I'm not going to do it right now, obviously, because I don't want to actually buy this for over $1,300, but that is how that works. And there's more information here. There's a lot of information for you guys. That's kind of complicated and don't need to really look at that too much. Although if you're someone who does want to get further into option trading, that is something you can definitely look to. And the good thing is that what's going to have here is going to show you what your max loss is. Okay, this is what I really like about Webull rather than Robinhood. You're going to have a max loss here of 1.35K. Reason why is because this option can certainly expire worthless, which means if Tesla does not get to $800 by the end of the week, this will be zero. This will be worth zero. Okay, and so your max loss is your total investment, and that's how options trading works. Of course, there are ways to minimize those risk spreads. You can buy puts as well, so you can kind of cap your risk on to a degree. But if you're just going to be buying one side, yeah, you can actually lose all your money. And it's going to have the last price of the stock updating right here, which is pretty cool to see. At least it'll show you that real time, because if you don't have the chart showing above and you want to get a bigger, broader view, this is going to be really cool to see right here. And then it's going to show you your break even. So what is this number? This number is $813.50 because you're paying $13.50 as let's say that's your price right here. My limit price is $13.50. That's going to cost me, $13.15. So when we get to the expiration date of the 28th or the Friday, whenever your contract expires, okay, so this is going to be dependent upon your contract, you're going to have a intrinsic value, as they call it, which is going to be the actual price above your strike price on the call side and your price below the strike price on the put side. The intrinsic value needs to be at what you paid it for or better for you to make money. So if Tesla's trading at $805 come Friday, your intrinsic value, or when it expires, is going to be $5. So you're actually going to lose a significant amount of money, a couple $100 on that trade. If Tesla is trading at $18 or at $820, then what's going to happen is you're actually going to make a few $100 because your intrinsic value is 20 on that contract, and when it expires, there's no time value, there's no volatility factor, so you don't have to worry about those things. The reason why Tesla right now, when it is out of the money, has a significant price like this, even though there's like essentially zero intrinsic value because it's out of the money, the reason why is time and volatility. Because of the time factor, because of the volatility factor, that is what's going into that. Because Tesla can move so fast, there's a significant chance that Tesla, if the market turns around, from the time I'm filming this video, the market has been taking a significant beating. If the market turns around, Tesla can shoot well over $800 super fast, and so that's why it's going to be expensive for you to buy this contract right now, because it can easily get there. Of course, there's no one saying it has to. It can easily pull right back down, but that is why the price comes in here at $13.50. Now, on the other side, right, we can look on the put side. And so here we have this. We don't want to do this anymore. We want to look at a put. Boom, we can click on any put. Let's say we look at the 785s. We think Tesla's going down. Overall market conditions don't look good. Tesla's super overbought right now, overextended. We want to look down, and it's going to show you guys the same type of thing. So bid and ask, pretty much simple. It's like when you're going back to trading stocks in general, or any stocks, you pretty much, like, one of the first things you're going to learn is the bid and ask. Ask where sellers are at, bids where buyers are at, and so like in between is kind of where you're going to have to get filled. And sometimes you can get filled at the bid. If you want to get filled right away, put a limit price at the ask. You're going to get filled pretty much right away. Or just do a market price, a market order, and you'll get filled. That'll fill you right away. There's just no guarantee you're going to get the best price possible. So if you're looking for getting the best price possible, then it's going to make sense to probably put this just above the bid or somewhere in between and test things out. Put the order through, see if it goes through. Of course, everything's moving. The stocks are moving, so that will also play into things. So if it starts moving against the direction that you're trying to get in, it's going to change the price of the bid and the ask, and so that will change. But here we go. Let's just take a look at this specific put option. So right now we can put a limit price here, or let's just say that we want to put it at 14 just to make it simple, and then we'll update me right here with the $1,400 total cost, because again, time this by 100, that's what you're going to be paying out of pocket for these contracts. Then we have a break even at 771. We have where the last price is right now. Tells you your max profit, tells you your max loss, which I think is pretty cool to see. And within, again, this is a contract that expires the 28th. So we can see a max loss. Again, your entire investment is going to be your max loss. You have a break even at 771. Why is that? Well, Tesla right now is trading at 788. It's 789. It's moving a lot right now. Well, because Tesla's going to have to drop to 771 for this contract to break even for you, for this contract to be worth at least $14 come the expiration date. So that's that right there. And then, of course, the further Tesla goes down below 771 come the expiration date, the more money you're going to make. Now, when you see this break-even price, this doesn't necessarily always mean that's going to be your break-even, because if Tesla gets to 771 tomorrow or today, what happens here, and this could be on the call side too, if it goes up to that break-even price today or tomorrow or before the expiration, this break-even is saying at the expiration date, is if Tesla's at this price, it's going to break even. So what's going to happen here is if this happens sooner, this is going to be worth a lot more money to you, and you can sell this contract for a lot more. Why is that the case? Well, because there's still time, which time is a factor, and there's still the volatility factor of Tesla. So this contract will be worth a lot more than $14 if, let's say, Tesla gets to 771 tomorrow. The time I'm filming this video, it is Wednesday the 26th, and so let's say the 27th, there's still going to be like a full day of potential movement. This will be worth a lot more than $14 if it got this break-even price today or tomorrow. So hopefully that makes sense. And one other thing to note here is that it will tell you the day trades you have left. This is kind of getting into more of the tips and the strategy time, because now we kind of know how this works. We can go on the call side, the put side. That's great. Okay. And so we can start to see, okay, cool. But now it's going to tell you day trades left. So what does that mean? Well, day trades is going to actually mean if you have less than $25,000 in your trading account, let's say in your Webull account, which, for example, I have right now, I have like a little over $2,000. So if you have less than $25,000 in your account, what's going to happen is you're going to be restricted by the Pdt Rule. And so the Pdt Rule, what it really means and what it really is going to prohibit you to do is day trade more than 3 times in a 5-day period. And so what this then means is, okay, how do I get around it? I have a video going over how to get around it if you want to find out all the ways, but essentially really kind of a quick and dirty answer here for you is get a couple brokers. So have Webull, have Robinhood, have maybe a different broker if you would like. Learn how to trade options on those platforms, or learn how to trade on those platforms, and that will open you up to more day trades. So for example, if you had a Webull account and you had a Robinhood account, you can now day trade 3 times per 5 days on Webull and 3 times per 5 days on Robinhood, giving you 6 day trades per a 5-day period, which I think should be a good amount for a beginner. Of course, you would like to have unlimited. That's obviously a great option, and then that's when if you go to offshore brokers, there's ways to get around that. But that's one awesome way to go around it. Now, getting into some of the strategy, what I will recommend is buying time. Now, the reason why I say buy time, because when you're buying time, you're giving yourself a cushion that if things don't work out, things aren't looking good, at least you can sell your contract for some value. Because if I were to buy an out of the money contract right now for a put, if I were to buy out of the money, right, let's just use calls for a better example. Let's say I was to buy this 800 contract right here, and this is out of the money. Tesla's below 800. Tesla needs to get above 800 for me to make money on this, and significantly above 800 because it's going to cost me about, $1,100, $1,200 for this contract. If I buy this for Friday, that's kind of risky because, of course, any news can come out. There's no guarantees this is going to be, going to get there. But if I buy this for maybe, March, April, right, it's going to cost me a lot more, significantly more, and I'll show you guys a better example as a stock that's not going to be as volatile, because the volatility, the time factor here is super high. But let's say I was to buy this contract out for April, it's going to cost me a lot more, but the value of this contract, again, today it's only down 4%. Okay, Tesla's down, significantly, somewhat significantly today, and this contract is down 4%. So I'd be able to, if things are going the wrong way, maybe I can have a couple 4% loss days in a row and say, okay, this is now out of my, my target, out of my charting. I'm looking at my charting. It's broken the trend line that I'm looking at. Let me get out of this position, and you're going to lose 15, 20% max, or you could, of course, cut your max losses. And I have a video going over how you should manage your risk when it comes to trading in general, so I'd recommend checking that video out. But at least your max loss is not going to be huge or 100%, because if you were to kind of hold this through the expiration date or up until Friday, if you had this and this expired in like 3 days or 2 days, and all of a sudden Tesla opens up tomorrow at 750 because it got some major bad news, you're screwed, and that's what's going to really hurt you. So I recommend buying time. And when you buy time, it's going to cost more, but at the same time, it's going to benefit you. And I can tell you guys that from so many experiences of having options when news came out, and I've been on the good side where good news came out and I had somewhat of a risky option that expired in like a day or two. And then I've had other times where, because the only reason why I jumped into it because it cost less and it was cheaper, so it was enticing. And I've also had times where massive negative news comes out on a company or just the overall market that has no effect or no direct effect on like the company's bottom line, like today, right? But the overall market is down, and boom, the stock goes down 5%, and I'm screwed because it never gets to my my actual strike price, and I lose money because I bought an out of the money contract. The next thing I want to recommend here when it comes to trading these options is really utilize these charting features here on Webull. I really like these charting features. Utilize like this little feature you can see where you can have both kind of here, and then I can click on one and it'll show up on the side. Utilize these features. Utilize the indicators, utilize the charts, because that's something that you don't really have on Robinhood, where you can kind of do both at the same time. And I really, really like those features because it makes things a lot easier for you to see. You can kind of see, okay, yep, looks like our low here is 778. If Tesla comes back down towards this low, it's going to probably bounce, or I think it'll bounce. Maybe that's when you time buying your contract, and then Tesla goes up, boom, you can sell it if it's a day trade, or you can hold it and you can expect a bigger move where maybe you want to look at, an hourly chart. Maybe you want to look at like a 5-day, 5-minute. Maybe it depends upon what you want to look at, but you can look at more of like a longer term chart. And see right now, yeah, Tesla's right around this point. This could be a strong support level. I think it's going to bounce back up, barring potential bad news. And so we'll see what happens, and then that can kind of hopefully hone your strategy. But looking at these charts, it's a really, really good idea. And of course, when you're trading these things, it's not like you have to worry super much about, okay, like what am I trading? You're really trading. Is the stock going to go up or down? And that's really what it comes down to. Of course, there's volatility, there's the time factor, and so that's going to impact a lot of the actual price of the options. But ultimately, right, if you can predict the move up or down, if you think Tesla's going to go up and you think Tesla is going to push 900 again in like a week or two, well, what I would recommend is, if you think it's going to happen in a week or two, buy a contract that goes out a month or two, okay? And buy those contracts, and if Tesla gets there in a week or two like you predicted, you're going to be able to sell that contract for so much more than you bought it for, so it's going to make money. And that is kind of like the best idea behind like a time frame strategy that I would have for you. If you're going to buy a contract that expires tomorrow or the end of the week, understand the risk and don't spend too much money, or don't spend money that you're not able to afford to lose, if that makes sense. But really it comes down to the stock going up or down. So calls, it's going to go up. Put, you think it's going to go down. If you predict the correct move, you're going to make money, and that is pretty much how you should look at it on a simplistic standpoint. Then of course, assessing the price of the options and seeing the time factor, the volatility. Does it make sense? Does it fit your price range? Things like that. So one quick example of why Tesla is like kind of like a bad example here, and the reason why I show it is because it's super volatile and it's been moving, and so you can kind of see how things work. But Apple, for example, Apple right now trading at $295. We can see these contracts are a lot cheaper. So if I want to buy a little bit out of the money, let's say I want to buy a 300, of course this is going to expire this week. It's only going to cost me right now, the bid's at 220. So let's just say 220. That means it's going to cost me $220 total for this contract, which is actually not that bad. And so that's kind of like the pull here towards like more or less volatile stocks, and that's the idea behind some of those. Of course, you can find stocks even less volatile than Apple, and get even cheaper prices. Or what you can do is buy contracts for stocks that are super far out of the money, but maybe they go out. Let's just show you guys an example here. Maybe you go out to like April right now. Well, of course, by the time you're seeing this video, it's in March, but maybe you go out to like April or May, and you go for like an Apple super far out of the money call. So what I'm showing here right here is like a 345 call. If you were to buy like a 345 call or a 342, this is 342. There's 345. If we buy a 345 call right now, bid 64 cents, ask 68 cents. This is going to cost you less than $100 to buy this contract, right? And of course, yes, there's no guarantees, but if Apple does make some significant moves, it breaks past 300 and it happens somewhat sooner, this contract can easily go to $1, $2, and your investment of $61 can easily, times 2. You can easily make 100% on your investment within like a week or two if Apple makes a significant move up. It doesn't even have to hit that strike price, okay? Because like we were saying, that break-even price would be $345.61, right? It doesn't have to hit that price, because if you're able to sell this, if it gets to there before, like I have April 3rd here, if it gets to there before April 3rd, right, or if it gets closer to this number sooner, this contract will have more value, right? It's going to have more value. Of course, you don't have really much intrinsic, but you have the volatility and you have the time factor, and so those factors will make this a much more lucrative investment, and it's a better way if you're starting out, if you want to play more of a lottery play. It will cost you so much less. And of course, those who had investments like this on Tesla a few months ago made a lot of money. They made a lot of money. And so that's kind of showing you guys the potential with a smaller amount of money. And of course, even less volatile stocks than Apple, you can get in for strike prices closer to the money or in the money for even less, and it's not going to cost you guys a fortune. I'm sure you can find the stocks. It's going to be up to it's really going to come down to what you're comfortable trading. I like trading like the SPYs, the Apples, the bigger names. I like those bigger names over like $100. I don't like trading option plays on stocks less than $100. That's just me. It's going to be up to you testing things out and seeing what works best for you. And a great way to do so is to use the paper trading option on Webull. I highly recommend using paper trading because it's going to be a great way to learn. You can even use it right inside the app. So when you get your Webull account, you can sign up, grab your 2 free stocks after you deposit any amount, use the paper trading platform, which is going to give you like $100,000 for free just to start investing and testing your strategies out. I highly recommend it. It's so easy to use on the app and it makes sense. And once you start to see how that works, then fund your account with some more money or start using your actual account. Just actually start making some real money as you can start to see your strategies kind of make sense. And one last thing I want to talk about here, guys, is don't think of trading as gambling. It's not gambling. It really isn't. It's really going to come down to a statistical approach. And what happens is, of course, there's no way to predict the market. You're not going to predict how Apple moves over the past month. You're not going to be able to predict it. You don't know. These ups and downs, you don't really know. But what you do know is Apple has overall been on a solid uptrend, and as of late, it has not been. Okay, so what you do know is these things. You can look into support, resistance, technical analysis, fundamental analysis, and that all comes into options trading. Don't just think of it as an absolute gamble. It does not have to be. And when you think of it as a gamble, that's not going to be a really great way to consistently grow a trading account, and you're going to find yourself struggling when it comes to trading options. And you might have some massive wins if you're going to be more gambling, but you're also going to have massive losses. And what's going to happen is you're going to feel really good, and then when you make that play or you double down, or you go half of your account into one play, into one option, and that option goes the wrong way and it expires at zero, that's how you lose significant amounts of money. That's how I've lost thousands of dollars on a trade, and so I really don't want that to happen to you. So again, links are down below, Robinhood and Webull as well. Reason why I have Robinhood, again, if you guys want to get onto 2 different platforms to have 6 day trades per week, I highly recommend using both platforms. You can get a free stock from Robinhood just for signing up. And I also have more videos going over the Webull app. If you guys want to see like how options look on the app, it's like Webull options trading is here. Check out that video, as well as the options trading for Robinhood. Check out those videos I have on the channel as well to give you guys a better understanding on how it works on Robinhood. More complicated here for sure on Webull, but once you kind of get a better feel and understand it, which I recommend paper trading first, it'll be fine and you'll get a great understanding and have a great grasp on how this works. Robinhood a lot simpler, but also not going to be as much information for you to kind of go off of when you make these trades. So there you go. Hope you guys enjoyed this video. If you did, make sure you leave a like down below. Comment, guys, any questions. I will be here sure to answer them in the comments. Of course, this video is kind of long, but also there's a lot more I could have gone into. There's a lot more specifics and there's a lot more aspects to the Webull platform. Any of those questions, please leave them down below and I can make a further video going over a specific aspect if that is something of interest. With that being said, guys, make sure you are subscribed and I will see you in the next video. Peace.